When people in the community decide that it's time to buy, they will jump on this in a very quick manner. Between now and the end of the year, the allocations of Bitcoin for next year from the traditional finance world are going to be increased. That is going to happen. And we make a lot of decisions on Wall Street for next year. When people make their allocation changes, I think that's going to happen in the final quarter of this year. And I think Bitcoin's allocation number will go higher across portfolios.
Hello everyone, this is BTC Insight and welcome to yet another deep dive into BTC Insight. Before we jump in, make sure to hit that like button and subscribe if you haven't yet. You won't want to miss this.
We're seeing this play out with moves like TSMC being pushed to build fabs in the U.S., incentives for domestic rare earth mining, and subsidies for semiconductor production. Through tax incentives, altered accounting rules, and reduced permitting friction, the government is essentially telling companies, spend now and we'll make sure you have the runway to grow into it. But as Visser points out, that raises another issue. When governments flood the system with incentives, you inevitably get a misallocation of resources. It's the China model all over again. Rapid expansion today, inefficiencies down the road. But as investors, our job isn't to panic about what happens 5 years from now. The focus is on how these policies move the needle over the next 12 to 18 months. And right now, the setup is for growth running hot and interest rates trending lower.
Administration is using a lot of China tactics. So part of what you said, I've highlighted in recent writings and in the video last week. I spent a lot of time on how the administration realizes that for national security, so let's go back to the worst part of the tariffs, the market's collapsing. You and I are sitting here and we just keep taking out our little 3-iron and we're hitting the ball down the middle of the fairway and going, okay, everyone's going to panic. Everyone goes through this. They're worried about doom and gloom, but it'll work itself out. And the reason it'll work itself out is at the end of the day, number one, the stock market's not allowed to fall because it's been financialized. So it can't fall or there's a recession. We can't have a recession because we have 6 to 7% deficit. Debt to GDP 100. You can't do that. Okay, so what's the other problem? The other problem is we have a national security issue. What's the national security issue? Well, if someone gets AI before us, we're at a huge disadvantage. So we need to focus on AI. What else do we depend on? Well, to actually get the AI, we have a national security issue. What's that? Most of the stuff we need for the AI is made in China. So we're racing with China. They have a lot of our supply chain. Okay, so we have to change this whole thing and we need to declare emergencies around national security. And so Taiwan Semi, you're going to build a fab here because your chips are sitting a boat's ride away from China. So exactly what you're saying is what's happening. And this is why they are going to continue to focus on, we got to go get our own rare earth. We have to build our own semiconductors here. We have to, and just keep going down the line. So the way that they're going to speed the things up here to the best of the ability is through the permitting side. It's through the tax incentives. So for CapEx, by allowing them to change the accounting rules on how they deal with the CapEx so that they can grow their way into it, that's kind of like a subsidy. It's kind of like, okay, you guys spend today, you're going to hopefully grow into it with your return on invested capital. The problem is, do I believe that, like in China, that means there's going to be a misallocation of resources? You're damn right I do. But that's 5 years down the road. And our job as investors is to think about what the way the market's going to work over the next year. There are going to be PMIs that are going up because the government is reducing the friction and setting a path. And as I've heard all of them say, and especially Chris Wright for the Department of Energy, if you have a situation where you can produce power and you're having restrictions, you call us up. That's a different mentality than it was before, where you couldn't get through to the administration on certain items. So they have made this a critical situation. Everyone can argue about whether it's the right thing to do, just like with the Fed. The reality is, as investors, they're allowing this to happen. There's going to be a misallocation of resources, but that's way down the road. And right now, this is a national security issue, which means we're going to grow the economy hot. And we're going to move rates lower. That's the playing field you're involved in. So I think all of that's going to happen. I think there is a lot of China thing, because I think if your competitors doing these things, you can't do exactly what they're doing, but you can do a form to kind of speed up and make sure that we can move at the same pace. The issue is the government has a massive deficit. So they're printing money to give to the private sector in interest payments. So who benefits from that? People that have lots of cash. So especially the hyperscalers, they're loaded with cash. They have cash sitting in a bank. So they were actually making a lot of money, and that's why the net corporate interest payments actually declined when they moved rates higher. And that was a chart that not enough people looked at and saw. It collapsed all the way back to the early 1980s, which means that the companies that have debt, small cap businesses, most of them had termed out their borrowing, at least the companies that could, particularly the bigger companies, out a long time when during COVID, when the Fed basically moved rates to lower levels, they all termed it out as far as they could. So they didn't have to deal with their issue. And then the bigger companies got the money. Same thing goes for the baby boomers. The people that suffer are the people that need to buy homes, people that need to buy autos, because those interest rates create an issue. And so mortgages, housing affordability is directly impacted by where rates are. So I think the reality is that what Mel said is something that gradually over the last few years has become something that more and more people realize, that when you have a big deficit and you have interest payments that's beginning, the government's losing, but someone's winning. And the people that are winning are the wealthy people that already have cash. And again, I think this is why Bessent put out a tweet to focus on the Fed needs to lower rates. And the reason they need to lower rates is to help the people that actually need access to the borrowing to be able to, I mean, young people they have time. They're going to have a job. They're going to have income for a while. They're not retiring for a long time. They want to build a family. You need to be able to buy a house, move into a bigger space. You need to borrow money.
On top of that, he points to Bitcoin sentiment gauges like MicroStrategy's Premium as useful signals. When enthusiasm is high, premiums surge. When interest cools, premiums fall. For Visser, this acts as a barometer of market psychology. Importantly, he believes that as traditional finance continues to expand allocations to Bitcoin, we'll see a meaningful uptick in institutional participation by year end. So whether it's AI, national security, fiscal policy, or crypto adoption, Visser's overall message is clear. We're in a period of structural change. Governments are intervening more aggressively, capital is being steered into strategic sectors, and markets are reshaping around these realities. For investors, the challenge is less about predicting collapse and more about navigating the opportunities and distortions being created.
Because it's based on how much money you've already received. And so by keeping rates at higher levels, there is a form of that going. That's why over time, if you go back and look at money supply growth, there is a relationship between what the interest rates are. So in the 1970s, when people were like, well, money supply was going through the roof. If you have money in a bank and the rates are 13% and you have any kind of income and you don't touch it because you're bearish and you just don't want to spend any money, your money grows. To some degree. Now, if inflation is also 13%, then you're spending more out of that. And that's where this whole relationship comes between the money supply and also the wages. At this point, with where we have rates, money supply is growing fairly rapidly around the globe right now. Part of that is the government handing out this money through, again, having interest rates and having a deficit. A crypto event together. It was in Miami.
It was not a Wall Street event.
No, and I it's funny because for that one, I'm like, what do I wear? You know, and by the way, he didn't have a suit on in Miami, guys. He was not dressed this way at a crypto event. I didn't know what to wear. And so, I mean, I saw people dressed any way they wanted. At Robinhood, a very similar thing. This was in Vegas. The event was very enjoyable. I wish I could say I was there for very long, but no, red eye back. So it was just there for meeting people, but I met a lot of people. And again, there's a different way that people who are trying to learn how to invest their money. And part of the investing side is the trading side. And what I learned in Miami was this 3-bucket portfolio approach that crypto people had that is somewhat similar to what the Robinhood community has. And so people understand this, and I think everyone should do this. You have a bucket of money that as you're making money or from your job and also investing, That's really the long-term stuff. That's in things that you're not moving around a lot. Think of that as Bitcoin, the Bitcoin bucket, or think of it as the Mag 7 bucket. Then you've got your next one, which is kind of the fundamental stories of things that you think are going to play out well that haven't played out yet. Let's put that as the Tesla or the Ethereum one. The ones that you kind of believe there's a fundamental story, you want to grow into it. And as that makes money, you take some of those off, you move it into the safety one. And then you have your party bucket, your game time bucket, the entertainment side, the meme coins, the open MicroStrategy. When people start sending me something like, are these companies going to blow up now? I'm like, what are you talking about? Well, MicroStrategy, the premium's coming in. How do you think about it? So everyone hears this. And I don't know why. MicroStrategy's premium to me is a sentiment gauge of Bitcoin. Okay. So when the community is really enthusiastic, the premium heads up towards 3. When Bitcoin's stuck for a while and people get bored with it, it starts to migrate towards 1.5. And that's kind of the way I view it is a sentiment gauge, just like for stocks, you have all these sentiment gauges. When people in the community decide that it's time to buy, they will jump on this in a very quick manner. Between now and the end of the year, the allocations of Bitcoin for next year from the traditional finance world are going to be increased. That is going to happen. And we make a lot of decisions on Wall Street for next year. When people make their allocation changes, I think that's going to happen in the final quarter of this year. And I think Bitcoin's allocation number will go higher across portfolios.
To wrap up, Jordi Visser reminds us that the investment landscape isn't static. We're living through a new era where deficits, demographics, and digital transformation collide with geopolitics and government strategy. While risks like resource misallocation are real, the near-term trajectory is set. Hotter growth, falling rates, and strategic capital flows into AI, semiconductors, and crypto. For investors, that means staying adaptable, understanding the game being played, and positioning wisely within the 3-bucket mindset.
That's it for today's look into BTC Insight. If you enjoyed this deep dive, hit that like button, drop your thoughts in the comments, and subscribe to stay on top of all the latest insights. Keep questioning, keep learning, and we'll catch you in the next one.